Everyone wants to keep more cash in their pocket, and I'm going to show you a strategy that's being brought back to the forefront today, how you can keep more of your cash or pay up to zero. That's right, zero in actual taxes. This can save you thousands, hundreds of thousands legally. One of the things the Trump administration campaigned on was bringing through more tax cuts. One of the ones I really wanted to pay attention to is called bonus depreciation. This is a copy of the bill that has already passed the House. This will most likely go through in the Senate and then become law. So you got to watch and make sure this actually happens, and we will do a follow-up video to confirm this happens. But here's where we're at today. On page 21 of the One Big Beautiful Tax Bill, you can see extension of the Tax Cuts and Job Act reform for rural America and Main Street. So this was extension of special depreciation allowances for certain properties. Under the current law, taxpayers are generally required to deduct the cost of property used in trade or business over a period of time. What does that mean? That is what we call depreciation. So when you buy a rental property or an income property, they take out the value of the land and they just keep the value of the structure. And they assume for a residential structure that that's going to fall down over the next 27 and a half years. That's how depreciation works. It gives you a little write-off every year. But what this does is this accelerates that write-off. For this year, we have a qualified property in 2025 that we get to deduct 40% of the cost immediately. The new provision, and where I want you to pay attention. This provision allows taxpayers to immediately expense 100% of the cost of a qualified property on or after January 20th and before January 1st, 2030. That means the Trump administration and the House decided for this bill, they were going to make it retroactive. In other words, properties you've already purchased this year, you can do this with. So what qualifies for bonus depreciation? It's appliances, it's HVAC systems, it's roofing, even landscaping. It's the items that are going to depreciate and fall apart faster, like carpet, blinds, trim work. You do a cost segregation study, and that cost segregation study will identify the items in your property that you can accelerate the depreciation on. I want to walk you through a real life example. Let's say you're purchasing a duplex for $800,000. You do a cost segregation study and you identify that $300,000 worth of the assets qualify for this bonus depreciation. This has to be done by a qualified professional, and your accountant has to be on board with this paperwork. So this requires multiple professionals to work in conjunction with one another. With 100% bonus depreciation, let's assume you are in a 35%. With 100% bonus depreciation, let's assume you're in a 35% tax bracket. What happens then is you get to write off all $300,000 against your income. If you're in a 35% tax bracket and you have $500,000 worth of income, that's going to drop your AGI, your adjusted gross income, to $200,000. Or in other words, I got to do the damn math on this one. I don't know. In other words, in this example, this could save you $105,000. And notice how your AGI dropped to $200,000. All you would need is two of these, and you would literally pay zero in taxes. This is how the rich are doing it. This is how the rich are getting richer. They're not paying a ton in taxes. This is how those hedge funds and those REITs keep growing, because high net worth individuals give them money so that they can get a loss on their K1 to drop their AGI on their tax return. Now, before you go and just start writing everything off, you have to understand there are pitfalls and risks. So for example, if you sell a property, you're going to have a really hard recapture. We're going to recommend you do a 1031. Secondly, if I'm doing a 1031 and I'm rolling my basis into this property, I may not be able to take full advantage of this strategy. You're going to have to look at the benefits and the cons with your accountant and your tax segregation consultant to see if it makes financial sense to do this. We believe for most long-term investors, this will make awesome financial sense. And this has helped us save hundreds and hundreds of thousands of dollars on taxes every year. One of the things that's really amazing is real estate professionals, we get unlimited interest write-off and depreciation. So if you can qualify as a real estate professional, you don't have a cap on these things. Generally speaking, you're going to have to spend 750 hours a year in real estate, and you're going to have that demonstrated or documented in case you get audited. That's why I carry a real estate license. I am a real estate professional. So I fall under this special tax category. Talk to your accountant to see if you can qualify for that, to take advantage of this at the biggest level. Even if you don't, what happens is this loss will just stack up and you can use it year after year to help lower your taxes. So this strategy has saved us hundreds of thousands of dollars, and I hope it saves you a bunch of money too. We'll be watching the Senate to see how the final version of this bill passes. What I bet money it's going to pass just like this or very similar to it. So don't let Uncle Sam take his unfair share of taxes from you. I'm Anton Stetner. Hit that magic subscribe button. Drop any questions or comments that you have below, and keep going along with us on this journey of saving money on taxes and putting more money in your pocket.